I'm Paul Cavey from East Asia Econ. The Taiwan dollar has been in the news a lot over the course of the last few days with this really unprecedented appreciation, 10% up over the course of a couple of days. Really hasn't happened in Taiwan since the 1980s. I'm going to talk about that today. And why you need to watch this is because there's a lot of talk in the market that it's driven by lifers buying back Taiwan dollar because of the US dollar exposure. And undoubtedly, that's part of the process. But what I want to talk about today is the economic fundamentals for what's happening in Taiwan. And actually, even before this happened, I've been arguing for the course of the last few months that we're sort of approaching a situation where the stars are aligning for a structural appreciation of the Taiwan dollar. And I think really that's the risk. That's the process that's playing out at the moment. And that's really what I think investors should be focusing on. So that's what I'm going to talk about today. And I'm quite excited to do it, in fact, because I look at the economies of China, Japan, Korea, and Taiwan. Now, obviously, in that order, Taiwan is the smallest. And also because it's been a relatively subdued place in terms of macro for the course of the last 20 to 25 years, there's not a huge amount of interest in Taiwan's economy. Obviously, from an equity perspective, it's very important. TSMC is one of the biggest companies in the world, obviously very important in the semiconductor chain. And so Taiwan gets a lot, and Taiwan's markets get a lot of attention from that perspective. But in terms of things that drive interest rates, looking at what's happening with the currency, all of that really for 25 years, not very much has happened at all. And so it's that, I think, that's very interesting to be talking about, because my thinking on this and all the analysis that I've done suggests that really the economy has been changing. And the reason why the currency and interest rates haven't been in the news for the course of 25 years or so is because the economy hasn't been at a stage to generate that interest. And that's really what I want to talk about today. So let's set a bit of context first. First of all, in terms of the currency. And then the first part of the presentation or the video today, I'm going to look at some of the history of Taiwan. History is sort of, something I think we need to appreciate in order to understand where we are today. So that history is about trying to understand why the macro drivers weren't in place for the currency and interest rates and these other things that usually change in economies, why that wasn't in place for 20, 25 years, and then move on and talk about what's changed over the course of the last few years to suggest that that's now beginning to shift. Now, when we think about the currency specifically, the interesting thing about Taiwan's currency is really it hasn't moved. And if you look at the currency, the Taiwan dollar versus the US dollar, really for the course of the last 25 to 30 years, it's been in a very tight band, getting up to about 28 at the strongest, down to about 33 at the weakest, but not really moving past those points. There's obviously some volatility in between, and that volatility is largely driven by the export cycle. When the economy is looking good, exports are growing, you tend to see money flowing into Taiwan, into the big equity stocks. As a result, the Taiwan currency tends to appreciate. When the economy is looking worse, you tend to see the currency depreciating because all that goes into reverse. Exports come down, investors become more pessimistic about the outlook for the big companies in Taiwan. They stop buying equities, foreign investor flows move out. That drives the currency down. So that really drives the cycle between 33 at the top and 28 at the bottom or thereabouts over the course of the last 2 to 3 decades or so. And that's really been the story. Now, why is that unusual? For two reasons. First of all, because the current account surplus in Taiwan during that period has been moving steadily rising. So the current account surplus is now about 15% of GDP. There's always been a current account surplus in Taiwan, but now it's particularly large. At the same time as that's happened, Taiwan has built up this incredibly large stock of overseas foreign assets because of all that current account that needs to be invested overseas. So that's one aspect that makes the currency look puzzling, why it's still so cheap. The other reason is because the economy, you think that the currency wouldn't move anywhere because the economy isn't very successful. There's no driver for the currency to appreciate. But Taiwan's economy is actually very successful. If you look at it on a per capita basis, Taiwan's living standards now are higher than they are in Japan. They're higher than they are in Korea, and they're about 90% of the level in the US. And that is basically a steady upwards improvement, again, over the course of the last 2 to 3 decades. And usually that sort of improvement, driven as it is by productivity, would mean that you would expect to see the currency getting more expensive. And in Taiwan, that just hasn't happened. And if you want to parallel an economy to look at instead, the example would be Singapore, where there has been this improvement in living standards as well, but in that process, the currency is appreciated. And that process hasn't played out in Taiwan. So the starting point for thinking about the currency is it basically hasn't moved for 25 to 30 years, And really, it should have done. So why hasn't? Why hasn't the currency moved? Why is it only in the news today? So first of all, I think it's important to understand the history. So that's what we're going to look at first. What's happened over the course of, what's peculiar about Taiwan's economy that explains this remarkable level of currency stability. And undoubtedly here, policy is important. And, and there's books being written in Taiwan, by people connected with the central bank, explaining why the central bank's policy over the course of the last few years has been to try to keep the currency stable. And that currency policy part of the puzzle is certainly very important. But I think it's really, even with that policy component, it would be difficult for that to happen unless there were macro fundamentals in place that allowed that policy to be effective. And it's really those macro fundamentals that I want to address now. So first of all, thinking about the history, what's peculiar about Taiwan's economic history that explains, this currency stability? So the first point is to remember that Taiwan had this big bubble back in the 1980s. And again, this is when we talked about this in a previous video, thinking about the parallels between today and the talk about a Mar-a-Lago Accord and the Plaza Accord back in the 1980s. Now, as we explained in the previous video, Taiwan wasn't a party to the Plaza Accord in the 1980s. That was between Germany, Japan, and the US primarily, aimed at making these other currencies appreciate to allow the US dollar to depreciate. And obviously that was one of the big components that led to the big bubble in Japan, which then burst and then set off this period of 30 years of malaise in Japan. Now that's well known. What's less well known is that Taiwan was very much part of the same process. So as the yen appreciated in the 1980s, so the Taiwan dollar also appreciated very quickly. As that happened, interest rates domestically came down and the equity market went through the roof. And in fact, the equity market bubble in Taiwan was bigger than the equity market bubble in Japan at the same time. As an example, like one of Taiwan's banks only, the market capitalization was bigger in the 1980s than the 6 biggest US banks combined at that time. So it really was a massive equity bubble. So why is that important? Because it can't last. So just as the bubble burst in 1989 in Japan, the same thing happened in Taiwan. And obviously when you've sort of had that level of excess in a particular sector of the economy, it takes a while to get over that. And so again, it's well known that Japan, the Nikkei index in Japan, has only exceeded the level of 1989 over the course of the last 2 to 3 years or so. The same thing is really true in Taiwan. It got there a bit quicker, but it took a long time for Taiwan's main equity index to get back to the level of 1989. And why is that important? Because it sort of explains that there was a lot of restructuring that had to happen in the domestic economy. And so, there's been this debate in Japan about the currency being too strong through that period of economic restructuring. And the same thing is, could have been true in Taiwan. So there wasn't the domestic market dynamism that would have allowed the currency to appreciate. That was true in Japan. It's also been true in Taiwan over the course of the last 3 decades or so. Now, the next thing that happened in Taiwan, so you had that bubble bursting in 1989, some restructuring of the economy in the 1990s. But then obviously what happened was the rise of China. So China entering the WTO in 2001 in particular, but even before that, as domestic production costs in China were much lower than they were in Taiwan, you saw this huge migration of manufacturing across the Taiwan Strait to the mainland. Now that was reflected in lots of FDI, but it also began to appear in the hollowing out of Taiwan's economy. And that again is very clear in the data. So when you look at one of these relationships that economists like to study, is looks at output per hour compared with wages per hour, both in real terms. Now, in the US, this is quite a well-known relationship, which is one of the reasons people look at this relationship to say that labor has been losing out in the economy. And this is one of the things that's led to this social angst that exists in the US and some of the other developed economies over the course of the last few years. Now, in Taiwan, that is very visible from 2001, essentially. So basically, when China entered the WTO, this big manufacturing movement from Taiwan led to a hollowing out of Taiwan's economy. In that process, wages didn't keep pace with productivity. So that really reflects 2 things. One, the labor share of the economy fell. So wages as a percentage of GDP steadily fell from the early 2000s until quite recently. And that's sort of easy to understand, right? Because if manufacturing is moving, jobs are moving away from Taiwan, they're being created in China, not in Taiwan's own economy. That means there's less demand for labor. And unlike, say, Korea, the labor movement in Taiwan is not nearly so strong. So there wasn't that level of protection for workers. And as a result, you tend to see labor losing out relative to capital. So that was one part of the process. The second thing that was going on was that there was a big negative terms of trade shock for Taiwan. So and you can you can understand that if we look at the difference between national income and GDP. So this isn't something that's often sort of highlighted in a lot of data. But when you think about standards of living in an economy, it really is about overall national income rather than GDP. And the difference between those two things is primarily the terms of trade. And the terms of trade is the relationship expressing how many imports you can buy for the amount of exports you generate. And so that is an important element of national income. Before 2000, that was adding about 15% above GDP to contribute to Taiwan's national income. After 2000, that proportion gradually disappeared. So by the time we got to about 2020, it was zero. So GDP and national income were basically the same because there wasn't this positive impact of the terms of trade. Why was that happening? Because Taiwan exports electronics products, and electronic products were being produced in China where the prices were falling. At the same time, Taiwan imports commodities. And because of the rise of China, commodity prices went up a lot. So there was this big negative terms of trade shock for the economy, which meant that national income got squeezed. And as a result of that, you see this gap appearing between productivity on the one hand and wages per capita on the other. Now, why is that important? Because the implication of all of that is deflation. And again, this is something I think which is underappreciated when people think about Taiwan and think about the Taiwan dollar, that during the course from 2000 until 2020, core inflation in Taiwan averaged 0.4% year on year. So Taiwan is the economy that comes closest to Japan in having this deflationary experience over the course of the last 20 to 30 years. There's really no economy really like them. So you see basically no wage inflation, and you also see no price inflation. And why is that important again? Really for two things. One, because it means the central bank is under no pressure to raise interest rates, at least not to raise interest rates relative to the rest of the world. And obviously, when you think about currencies, one of the drivers of currencies is the interest rate differential that exists. And so you can see that in, over the course of the last few years, right? So we've had this period where US interest rates have been rising because inflation is strong. In Asia, interest rates haven't needed to go up nearly so much, with Japan being the prime example of that. And because of that interest rate differential, the yen has been very weak. And that process was also playing out in Taiwan over the course of the last 20 years or so. That this is so the fundamental reason for the currency being relatively weak is because there was no inflation. And if there's no inflation, there's no need to increase interest rates. The other reason this relationship is important, and what was happening to income growth relative to productivity, is because of something which we'll come on to later, which is to think about how the exchange rate affects the policy debate within Taiwan. So if you are in this situation where incomes are relatively low, what you see in Taiwan is when you get to elections, there's always this big complaint that wages never rise. And wages were never rising. It's not an unfair complaint, right? Like we saw this in the data for 20 years that there was no wage growth in Taiwan. There was no wage growth because of this hollowing out to China was one of the things that was going on. And because of that, this is always an issue in elections. And again, that's important now when we come to think about what might happen with the currency next. There's one other thing which is important to think about here, which is then the external surplus. So, in this, as the economy weakened from 2000 or so, and as domestic demand was relatively weak because of both the bursting of the bubble and the hollowing out to China, this was when the external surplus really began to grow. And again, we're now in a situation where the current account surplus is 15% of GDP. That didn't just happen overnight. It's been a steady rise over the course of the last few years. And it really was in this process where the economy was getting over the bubble of the 1980s and coping with the manufacturing moving over to the mainland, this external surplus began to appear. Now, normally, in sort of economic theory, you would expect that an external surplus like this would lead to the currency appreciating. So you have this big current account surplus. It shows the economy is very competitive. It also means there's a big demand for money coming back into the economy because of all these earnings that are generated overseas. So in that situation, you should see the exchange rate appreciating. But obviously, that didn't happen in Taiwan. The currency is no more expensive now, pretty much, than it was back in 2000, at least relative to the US dollar. So that feed through from the currency to the external surplus didn't happen. And again, I think one of the reasons for this was because of this interest rate differential, that there was no need to increase interest rates in Taiwan. And as a result, the currency remained relatively cheap. Now, that's not the end of the story, because it also depends on what then investors think about how to place their money. So if you think about the average exporter who's earning a lot of US dollar overseas, they still need to think about whether to bring that money back into Taiwan. And in a situation where the currency is quite closely managed, there isn't a clear trend of appreciation. In that environment, you do end up with investors tending to keep their money in US dollars rather than bring it back into the local economy. And so in a sense, this currency trend becomes self-reinforcing. And again, I think that's the reason why the currency hasn't moved very much until over the course of the last few days, this very big appreciation. So that's the first thing I really wanted to try to address, thinking about the history of Taiwan over the course of the last few years. And I think it does go a long way to explain why the currency, is where it is today. So that's the first part. Now, it does feel, and as I said in the introduction, it feels to me like that situation is now changing. And it's changing because the economy has begun to shift. And some of that is getting over the problems of the 1980s. And so again, the equity market is now back to where it was in 1989 or above those levels. But there's also a lot of other things that have been going on, and it's important to address those. For the first thing is to think about that flood of manufacturing into China. Actually, that peaked not in the first trade war of whenever it was 2017, 2018, and all the pressure from the developed economies to have de-risk from China, to have supply chains move out of China. That's undoubtedly been putting pressure on Taiwan and resulting in some manufacturing returning to Taiwan from China. But the other thing, that actually Taiwan's FDI into China peaked back in sort of 2008, 2009 at the time of the financial crisis. And so the thing that, again, was going on is because China's economy was doing so well, wages were going up, and that competitive advantage that China had relative to Taiwan in the early 2000s began to disappear as you move into later in the decade. And as a result, there was no longer that big pull of manufacturing over across to the other side of the Taiwan Strait. So the hollowing out of Taiwan's economy, that was such a big important reason why inflation was so low from the from the early 2000s. And again, low inflation was one reason why interest rates couldn't rise, and therefore one reason why the currency didn't change. That very low rate of inflation began to disappear as we moved through the pandemic time, because manufacturing is no longer being sucked out to the mainland in the same way it was before. So one thing that changed was the rise of China, the manufacturing moving out to the mainland. That really began to stop around 2008, 2009. Now, we can see that appearing in some of the data for the domestic economy around 2015, 2016, again, before the trade war really began to hit from 2017, 2018. So we began to see wage growth in manufacturing starting to pick up around that time. It still wasn't very strong, but there was a change from before where there was basically no wage growth in Taiwan at all. So there was a change related, I think, to what was happening with China and the manufacturing stuff moving back from the mainland. So that's one point. The second thing is then the pandemic. And the pandemic, I think, was very important for Taiwan, not because of the impact that it had in the rest of the world, where there were big lockdowns, the government had to take out huge amounts of debt, the economy was very weak for a while, sort of generational type recessions going on. None of that happened in Taiwan. So the government coped relatively well with the pandemic, at least to begin with. And because of that, there were no big lockdowns in Taiwan during the whole course of the COVID pandemic. Why is that important? Because it meant that there wasn't the major hit to domestic demand that was seen in the rest of the world. So there was some weakness, but it wasn't nearly the same extent that was seen elsewhere. And because there wasn't that big hit to domestic demand, there also wasn't a need for the government to issue a lot of public debt to bail out the economy. So unlike most other economies, Taiwan has come out with the pandemic with no higher public debt than it went into. And in fact, public debt in Taiwan right now is still very low. Now, at the same time, the pandemic was very good for Taiwan because it resulted in this huge demand for tech. And that can be seen really in two stages. So the first was the first thing of working from home and the big demand for tech that resulted from that. So that's obviously important for semiconductors, and it's important for tech hardware like, PCs and notebook computers, all of which are made by Taiwanese companies. So as that process happened, exports surged. And so again, while the rest of the world was really struggling with the pandemic, Taiwan's economy actually did very well during the pandemic because it was led by exports. And in fact, Taiwan is probably one of the only economies in the world to come out of the pandemic looking stronger than it went in. And in fact, it's very clear in the data that if you look before the pandemic, Taiwan's economy was growing sort of at a level similar to Korea. Since the pandemic, Taiwan's growth rate looks much similar to mainland China. So there's been this huge acceleration over the course of the last 5 to 6 years or so. And again, that's because of this rise in IT demand that happened during the pandemic, which then has got a second wind because of the AI demand that has been kicking in since then. And so there hasn't been any pause in this. And this can be seen very clearly in TSMC's results, for example. So there was a downturn so after the initial demand the initial increase in demand during the pandemic of 2021-22, 23 was a weaker year. But in 2024, export growth came back once again. And if you listen to TSMC, it still has a very bullish outlook for the course of this year of growth of about 25% year on year or thereabouts. And it's important to understand both the role of semiconductors and the role of semiconductors and TSMC in the economy. And you would think that somewhere like Korea should be similar to that. Obviously, Samsung is a very important company, and Samsung in the semiconductor industry, and Samsung is obviously also very central to Korea's economy. But there's two big differences. So one, TSMC has managed to ride the AI wave in a way that isn't being seen in Samsung. So TSMC's relative to performance, relative to the biggest economy, that company in Korea was quite different. But the second thing is just the size, the size of the semiconductor and tech space in Taiwan is just much bigger relative to the economy. So if you think about semiconductors is about 20% of Korea's exports. They're about 50% of Taiwan's exports. So Taiwan now is very much like a sort of a one-sector economy, that it is all about semiconductors, and that's all about AI. But because this is a very large sector within the economy, it matters for the overall macro situation. And it's on the back of this that the economy now looks much stronger than it has done, certainly before 2020, and in fact, arguably since sort of the 1990s, where growth has been much stronger. And that's because of this coming out of the pandemic on a very good footing. Now, there's two other things to add here. So the first is to think about domestic demand. So as I talked about before, domestic demand coming out of 2000 was relatively weak because wages were low. Private consumption couldn't do very much as a result. Now, again, if you look at private consumption in Taiwan over the course of, since the pandemic, if you look at Korea, private consumption is very weak, particularly relative to it was before 2020. In China, there's been a recovery back to where we were sort of in 2020. Taiwan is one of the few economies where consumer spending is actually higher now than the trend before the pandemic. So again, it's not just in terms of exports that the economy is doing well. It's also in terms of domestic demand, where there's much stronger demand than there was before. Now, why is this important? Because it's one of the things that again informs what we should think about inflation and wage growth. So coming out, again, 2015, 2016, there were signs that manufacturing wage growth was beginning to accelerate. During the pandemic, manufacturing wage growth picked up once again. So there's been now two inflections in wage growth over the course of the last 10 years. There's a change going on in the economy. That's the important point about this. It's not in all sectors. So again, in services in Taiwan, it doesn't look so strong. But again, manufacturing is an important part of the economy. So manufacturing wages rising should be dragging up the rest of the economy at the same time. Now, there's one other kind of complication or important thing to be thinking about here and explaining why this process is now playing out in a way it didn't happen before. Why is wage growth now stronger now than it was before 2020? And one of the reasons for that is aging. And there's a particular aspect of aging in Taiwan which is important here. So obviously both Japan and Korea and pretty much every other economy in East Asia is aging quite rapidly. That aging means that the population is falling, and the population falling is led by the working population first, because obviously older people are living until longer. So in this situation, if you look at Japan and Korea, as much as the populations are falling, the labor force is still rising, or is at least stable in Japan. So why has that happened? Because there's been a big increase in participation rates in these other economies to offset the impact of aging. So that's seen in female workers coming back into the workforce and older people staying longer before they retire. That means that the working age population, as much as that's falling, the labor force continues to expand. So why is this important? Because aging, it's easy to think that aging is a constraint on the labor market. But in most of Asia, it's not, because the participation rate increases. But in Taiwan, that's not happening. So Taiwan is also aging. The population isn't increasing anymore. At the same time, the participation rate in Taiwan is not rising. And there's particular reasons for this. So the female participation rate isn't rising, and also people isn't rising nearly as quickly as it is in the rest of Asia. And people tend to retire much earlier in Taiwan than they do elsewhere. Why is that happening? One of the reasons is because it's very difficult to find a part-time job in Taiwan. So part-time work is, if you look at both Korea and Japan, the increase in participation rates has happened hand in hand with an increase in the number of part-time workers in the economy. In Taiwan, that isn't happening. And there's some sort of social stigma that makes it difficult for employers to offer part-time jobs in Taiwan in the way it happens elsewhere. So I think it's an interesting aside, but it does matter for the economy, because it then means that the labor market becomes a constraint on wages in the way it isn't seen elsewhere. So essentially, when you think about the labor market in Taiwan, you have two things going on. On the one hand, demand side has been very strong because of TSMC, because of domestic demand, because the economy has come out of the pandemic looking strong. On the other hand, you have supply constrained because the participation rate isn't rising at the same time as the population is starting to shrink. So what's the upshot of that? Demand going up and supply coming down. Well, obviously, you should think that wages start to rise. And again, it's still not dramatic in Taiwan. Wage growth is still, in manufacturing now it's running at about 3.5% or thereabout. So it's no longer particularly low. But obviously, this isn't a particularly high rate of wage growth either. The point is, there is a change. And it does not now look, it's very difficult to think that manufacturing wage is going to come down very sharply over the course of the next few years. It's more likely that Taiwan is becoming a more normal economy, that wage inflation is going to be around, 2 to 3%. As a result of that, core CPI is not going to go back to zero as it was before 2020. It's much more likely that inflation remains somewhat higher than it was before. And again, why does this matter? And to bring it back to kind of the topic that we're really talking about here, why does it matter for the currency? Why does it matter for financial markets? Because if inflation isn't going to be zero, interest rates aren't going to be zero either. We're seeing the same process play out in Japan, where the central bank needs to think about where interest rates will be because inflation is no longer zero. The same thing is true in Taiwan. It's a different economy with different dynamics, but that underlying discussion is still very relevant. And so again, why does this matter for the currency? Because in an environment where there is no inflation, interest rates don't need to rise relative to the rest of the world. It's always easier for the currency to be weaker because there is an anomalous interest rate differential that supports the currency getting stronger. In Taiwan, that was the case before 2020. I think it's very unlikely that we go back to that situation today because of the strength in Taiwan's economy that are now very visible, particularly in terms of TSMC and in terms of tech. Now, so we've done two things so far. We've talked about the history of what's going on, and we've talked about where we are today and what's changed since 2020. The next thing to talk about then is sort of just a bit of a recap and think about some of the fundamentals for the economy and the fundamentals for the currency. And there's a few things that stand out here. Some of them I talked about before, and some of them I wanted to discuss once again, because they all differentiate Taiwan from economies in the rest of the world. And some of them are really sort of remarkable. Like when you think of them as an economist, they really are quite interesting. So the first one is the current account surplus and the trade surplus. So the trade surplus is now, double digits as a percentage of GDP. The interesting thing about the trade surplus is that it's now been the driver of the current account, the trade surplus has switched from China to the US. And so again, like as all of that manufacturing is moving over to the mainland, after WTO entry and into 2010, 2015 time, the trade surplus in Taiwan was really a result of trade to mainland China. Now the trade surplus is much more the result of trade to the US. So the trade surplus to the US alone is now more than 10% of Taiwan's GDP. And basically that's up from, very low digits 5 or 6 years ago. Now, why has that change happened? It is, because of all those changes that have been happening in China, that domestic demand is weaker, there's less trade to China. It's also precisely because the US has wanted trade to go more directly to the US. And Taiwan companies, and particularly the tech companies, have responded to that. So as a result, the trade surplus is very large. But obviously that's now politically sensitive because President Trump is so much focused on bilateral surpluses. So it's sort of ironic, really, that Taiwan has done a lot of the things that the US would have wanted them to do. As a result of that, it's ended up with this massive trade surplus with the US. And because of that, it's firmly in the crosshairs of tariffs because of this huge trade surplus. So in any case, you have these two things on the external surplus that stand out. The current account surplus is very large. And within that, the trade surplus to the US is particularly big. The second thing that stands out about Taiwan's fundamentals is the amount of foreign assets that Taiwan has. So economists think about this in terms of the international investment position. And the net international investment position of Taiwan, it has both as a percentage of GDP and in US dollar terms, is the fifth biggest holder of foreign assets in the world relative to any other economy. Now that really should stand out because as much as Taiwan is the large economy, it's certainly not the fifth largest economy in the world. And yet it has US dollar assets, which are as big as some of the much bigger economies. So it's about 250% of domestic GDP. That really is only similar to some of the financial centers like Hong Kong or Singapore. But it's also bigger, as in US dollar terms than a lot of other economies. Now, why is that the case? Because of all the current account surpluses that have been accumulated over the course of the last few years. So Taiwan continues to have lots of money coming back. That gets reinvested overseas, partly, and that reinvestment process allows the currency prevents the currency from appreciating. That means that Taiwan ends up with all of these foreign assets. The net international investment position of Taiwan is very big relative to any other economy in the world. The third thing about Taiwan's fundamentals that stand out is public debt. So again, I've talked about this. During the pandemic, Taiwan didn't need to increase borrowing at all. And in fact, I think one of the reasons why wage growth and consumption was so weak in Taiwan after manufacturing fled over to the mainland, after WTO entry, is because there wasn't as much of a fiscal response as there should have been. So basically, there was nothing to offset that hollowing out that was happening. Now that again has left Taiwan with this very low level of public debt, sort of 30 to 40% of 30% of GDP or thereabouts. So relative to other economies, again, public debt is very low. So if you're thinking about what would value a currency, like do you think that there is a strong value to a currency? Things like the current account surplus, the net international investment position, and also thinking about public debt, all of those things I think are important in thinking about the fundamental valuation for a currency. And there's a few other things to mention here in thinking about this. So one is the manufacturing sector. And this isn't so important sort of as a fundamental driver of the currency, but I think it is both interesting and it's important politically. So what you've seen in Taiwan is like this amazing revival of the manufacturing sector. So usually what happens as economies get richer is manufacturing tends to fall as a percentage of GDP, services tend to rise. Now that just hasn't happened in Taiwan. In fact, since the early 2000s, you've seen a steady rise in the manufacturing share of GDP, and it's now at about 35% of GDP. Now, in more developed economies, or in the rich economies of the world, it's only about 10% of GDP. So why is this important? Because it also plays into President Trump's agenda, right? So this idea that there's been this like the US has lost manufacturing share, it's been stolen by other economies. You can argue about the dynamics within that, but certainly if President Trump wants to look at Taiwan, it's a very good example of how manufacturing has exploded higher over the course of the last few years. And Taiwan very much is a manufacturing-led economy to sort of a very extreme degree relative to another point about the fundamentals, which is just how rich Taiwan's economy is. Now, again, I talked about this a little bit earlier, but when you think about GDP per capita, like how well Taiwan's economy is developed, again, from a GDP perspective, in per capita basis, Taiwan is a rich place. Now, and that is because it's, the data is better than Japan, it's better than Korea, and it's also getting close to US levels. So if you are a resident of Taiwan and you live in Taiwan, and particularly if you don't travel, then Taiwan is a great place to be because relative to the cost of living, the standard of living here is very high. And I think that's important. However, when you look at it from a US dollar perspective, so a US dollar per capita perspective, Taiwan does much more poorly. There hasn't been that same growth over the course of the last few years. And relative to other economies, Taiwan doesn't actually look particularly rich. Why does this matter? This is important for two reasons, again, because we're thinking about the currency. So one, because it means that when people travel overseas from Taiwan, they don't feel rich. When they speak to their relatives working overseas who earn US dollar incomes, they don't feel rich because in US dollar purchasing power, Taiwan's economy doesn't look very strong. And why is that? This gets back to the exchange rate. The difference between that GDP and US dollar GDP is basically the exchange rate. And so this is in an environment where the current account surplus grows steadily, productivity growth is very high, that results in GDP growing, but the exchange rate doesn't appreciate. You don't end up with US dollar incomes increasing in the same way that they naturally should do. And so this then, again, is important for thinking about, the implications for the currency and implications for the discussion in Taiwan, that in that environment, that should become a political issue for Taiwan and for politicians domestically, because the big consideration at lots of elections is wages aren't going up. When people speak to their relatives overseas, they don't feel particularly rich. Why is that? Shouldn't that be something about the exchange rate? And therefore, shouldn't that become an issue for politicians to be discussing? One final point about this. So I've gone through these different things about thinking about fundamentals, like thinking about the trade surplus and the current account, the net international investment position, public debt is very low, manufacturing is very high, all of these things. Basically, if you think about Taiwan economically, in many ways, the Taiwan dollar would be a safe haven currency, right? Because the external dynamics, fundamentals behind it is exceedingly strong. Now, obviously, you can't really think about Taiwan as a safe haven economy, partly because of this threat of invasion that hangs over Taiwan, which is very real and is probably becoming realer over the course of time. And the second reason is because as much as the fundamentals look good, there's also essentially capital controls. And so the Taiwan dollar isn't a freely traded currency in the same way that it is for Japan. So you've got this sort of paradoxical situation where the fundamentals of the economy are very strong, but historically the currency hasn't traded as strongly as it should do, partly because there is always going to be a discount given Taiwan's sort of peculiar economic and political place in the world. So got three parts to the story here. The first, the history, which I think goes a long way, it goes a lot of the way to explain why the currency ended up being so weak for so long. The second thing, what's happened over the course of the last 10 years, and particularly over the last 5 years, which is the economy getting over all of those historical problems that Taiwan had and emerging actually as quite a dynamic, growing quite quickly, inflation rising, becoming more like a normal economy over the course of the last 5 to 10 years. And thirdly, partly as a result of all those historical things, but also those strengths that are playing into the revival of Taiwan's economy in recent years, the fundamentals for the currency look very strong because of this, ridiculously high external surplus and low public debt and all of that. So that's where we are today. Now, what we've seen over the course of the last few days is this very sharp move in the currency. So the currency appreciating by, whatever it is, 10% in 2 days. Like it's really unprecedented since the 1980s and the heady days of Plaza One, when the currency appreciated very strongly, and the equity market went through the roof. So those are the three elements of what I wanted to kind of the basis, I think, for how we should think about the currency and what happens next. Now, because of those things, and particularly because of this change in the economy over the last 5 to 10 years, I've been arguing recently, for the course of the last, at least the last few months or so, that it does feel like the stars are aligning for the currency to trade in a different way to how it has done previously. That the pressures the forces that resulted in the currency remaining so low and so stable for many years, that those forces are beginning to change. Now, even with that, I've been surprised that the currency has moved, appreciated by 10% over the course of the last 2 days, like something that hasn't happened since the 1980s. And like that kind of move is clearly something that's going to be worrying policymakers in Taiwan. They're always very paranoid about the currency anyway. They're paranoid about people discussing the currency. But there's also, because Taiwan is such an export-driven economy, that it does, a 10% move in the currency, and even after a 10% move in the currency, it's still not particularly strong. It's not expensive in any fundamental sense. But Taiwan is an export-driven economy. There's going to be lots of smaller companies that can't cope with that. I mean, I think, companies like TSMC, they have pricing power. This shouldn't be too much of a problem for them. But because the currency hasn't moved for so long, there's going to be lots of manufacturing companies that are used to the currency remaining cheap. And therefore, any move in the currency, any appreciation is going to be painful. And that is an important consideration for policymakers when they think about where the currency goes from here. So that's one thing to be thinking about. The second thing to remember when thinking about what happens with the currency in the short term is that right now, it does seem that the currency is going against cyclical fundamentals. What I mean by that is usually in Taiwan, you see the currency moving in the same direction as exports. Again, when exports are doing well, the equity market tends to do well because all the big listed companies are basically exporters. Money tends to come into Taiwan. The currency tends to appreciate. So it's a pro-cyclical process. What we're seeing at the moment is a very counter-cyclical process where the export sector, if anything, has begun. It's been exceedingly strong in the first quarter of this year, but the leading indicators for the export sector are weakening because of the big threat of tariffs that's coming from the US. And that's resulting, so the leading indicators weakening and actually some equity outflows from Taiwan. At the same time, the currency has been appreciating. So if you think about from the usual cyclical drivers, actually the currency is starting to look like it's moving in the wrong direction. So when thinking about where the currency goes from here in the very short term, you have to think about both the reaction of policymakers who will be concerned about smaller companies in Taiwan losing competitiveness, and you have to think about it's moving in a sort of unusual direction relative to the rest of the cycle. Now, having said that, I think there's kind of 4 things we need to be watching from here, which will determine where the currency goes next. The first and probably the most important is US policy. Now, we don't know. It does seem, so last week with the first discussions between Taiwan and the US authorities about the tariffs that President Trump has proposed, it wasn't really clear what was discussed in that. And particularly whether the currency is on the table. Now, before Treasury Secretary Bassem took office, he did write about how undervalued currencies were playing a role in the misvaluation of the US dollar and the problems that the US manufacturing sector is happening. When the liberation tariffs were first being discussed in the US made it very clear that currency undervaluation was something that the US considered a non-tariff barrier. So, again, thinking about the currency in Taiwan that hasn't moved for years, even though productivity is very strong and the current account surplus is very large, you would think Taiwan will be a prime suspect and a prime candidate for currency appreciation as a result of that. So it's unclear whether that was discussed on Thursday. It's unclear whether that was a signal that got into the market on Friday and allowed the currency to start appreciating. But it wouldn't be surprising, it should be part of the discussion if the US is serious about collecting global imbalances. That said, it doesn't seem like a very sensible policy from the US to push the world into recession and expect the Taiwan dollar and other currencies to appreciate massively. Like, policymakers are going to be very worried, very sensitive about doing that because obviously it's going to result in much bigger recessions domestically. So in a way, the next stage for the Taiwan dollar, I think, depends what direction the negotiations move. And if it's a quid pro quo where Taiwan gets tariff relief and therefore the currency appreciates, that's one thing. But if we go through the course of the next few days, and as is being rumored, that the tariffs on semiconductors end up being very large, I think that's going to take away a lot of the risk of the currency moving higher because it's not something that is going to be conducive with Taiwan's cycle. So US policy is going to matter a lot. The second thing, in terms of politicians domestically, and I think, again, this is sort of an important issue, and again comes back to I've been talked about it a little bit already, that wage growth is very low in Taiwan. It has been for years. Wage growth in US dollar terms is particularly low relative to relatives and friends working in the rest of the world. So will we get in a situation where politicians, not the central bank so much, but politicians in Taiwan start to use the currency as something that should be debated, and currency strength being used by politicians as something that appeals to households. And it would usually be thought in economic theory that if you have a stronger currency, that's going to be good for the household sector because it increases household purchasing power. And the easiest way of thinking about that is if you want to buy an imported good as a household, it's much easier to do that if the currency is at 25 than if the currency is at 35, for example. And so far, and again, like another thing that's a feature of Taiwan's economy over the course of the last generation, really, is that the currency isn't talked about politically, really. It's not really thought about as being, it's sort of about kind of as a structural part of the economy rather than being a function of particular choices that policymakers make. And whether politicians in Taiwan start to address that, that's going to be important also in thinking about where the currency goes next. Just to recap where we are, we've got like a history which explains a lot of the reasons why the Taiwan dollar was weak for a long time. We've got recent developments in terms of economic revival, which make it look like the currency should be changing. You've got fundamentals for the currency look very strong. And then you've got two things you need to be thinking about. Thinking about which would determine the currency in the short term, what US top policy does, and how politicians here start to think about the currency. Again, like I tend to think there's good reasons now to expect that the currency should be stronger from a structural perspective. It's going to be much easier for that to be. It's much easier to see that happening cyclically if you're in a situation when the global cycle is strong and at least tariffs aren't leading to a sharp slowdown in exports. I think it's much more difficult to see the currency appreciating here if there is now going to be a big export recession because of tariffs that hit from the US. So I think that's the most important thing to be watching next. I hope you found this video interesting. As you would have seen, we've used a lot of charts here, and it's important. Some of the commentators, some people have left messages previously on previous videos, like asking about some of the data. So I think we try to improve the charts today. But I think also important to remember that on the website, eastasiaecon.com, you can find all of the charts, you can download all of the data, and if you have any other suggestions, then please let us know. Thank you very much for watching.